Now, you've got to remember something, folks. Day in and day out, all I do is meet with savers, and many of these savers are retired or nearing retirement. Generally, our clientele includes people pretty much over the age of 50. These are folks that can't afford to take a lot of risk with their money because they're going to be drawing it out soon. Now, as we record this show in late April of 2025, I know we're on a roller coaster ride. That's what the stock market does, folks. It moves up and down all the time. In fact, I want to kind of explain risk a little bit and understand that risk doesn't necessarily mean risk until you need the money. Let's take a look at this. The first graph is a snapshot of this year between April 3rd and April 10th. And I mean, that's what you call a roller coaster. And I know this is scary stuff. People ask me all the time, Tony, what's your prediction on the market? I never predict the market, but I will say this. I've been doing this over 40 years, and I've seen some major market downturns, and I don't think that's where we are right now. We have a lot of changes in the government, a lot of changes with all these tariffs, a lot of uncertainty. It's creating a lot of blips in the radar screen. But you have to remember something. Let's go to the next graphic, Derek. This is really interesting. When you're looking at risk on a short-term basis, it is really scary. But even if we just go back from roughly this period of time today and go back 12 months, notice that on paper, you wouldn't have lost anything. So think about this. Let's say you got a 401k. It's gone up a lot in value over the last several years, assuming you were in the market. It's down a bunch now, but on paper, over the last 12 months, you're basically back to break even. All right? Now, let's see what happens, though, when we go back to a major crash. And we're going to talk about stock market crash risk in a minute. This is what we call a crash. Now, again, could it happen in 2025? It could. I don't know that. That's why if you're retired, you better not have all your money in the market. But this is a true crash. So if you look at this, if you had $500,000 and you're going into retirement, this is a problem because now you got $250,000 and you haven't even paid taxes yet. What a disaster. But now you might go back to 2008. Next screen would show where most people were. Folks, in 2008, the majority of baby boomers were still working. They were in their 40s, early 50s. They could handle a crash like that. But more than likely, the clients we have cannot. So maybe that's you right now. You're sitting there thinking, yeah, Tony, I'm retired, or I've only got a few years away from retirement. Wall Street keeps telling me I got to take all this risk. What I would say is that's not the case at all. We have proved that time and time again. Folks, we have over 3,500 customers. I've been doing this over 40 years. We can help you if you want to safeguard more of that money.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.